Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola, and Malaysian palm oil.
Paris rapeseed. 10 weeks ago, prices drove higher. However, this drive upwards did not reach its full potential, and instead turned back lower, dropping down through the purple highlighted neckline extension of the June to October 2023 head and shoulders top, currently at 496.25, and the green highlighted short medium moving average, currently 486 even, forming a small descending wedge pattern, almost a bare channel in the process, until it reached down to the 2013 high at 464.25. In late June, the market broke up through and closed over the upper wedge trend line and made a fresh onslaught higher, reaching the primary and secondary targets for this small descending expanding wedge pattern, and rising in early July to make new highs not seen since July 2023, and finally fulfilling the potential topside at the congestion seen in September 2012 between 513.75 to 519.5. Once there, prices again fell away, but this time a little short of the 2013 high, and as far as the rising purple highlighted medium moving average, currently 474.75. 2 weeks ago, we've seen a rise peaking at the start of last week, just over the purple neckline, before falling later on to this week just under the purple highlighted medium moving average. All this activity has given right now a June to date based very wide bull channel, which is currently 467.5 to 520.25, which I've highlighted in dark blue on my daily chart. Now, this, I stress, may not be the final pattern here, but it is the pattern that is currently dominant and the one we have to deal with, and I would thus treat the bull channel as the key current feature, with the purple neckline acting like a median line, if you will, with or without the aid of anything. Until something else develops, this will be it. Now, I have some ideas of what might be next, but I feel obliged to keep quiet about them for the moment, as they do not have enough supporting evidence to warrant my even mentioning them right now. Winnipeg canola. In the last days of May, the market moved up, breaking through the gold highlighted long moving average, currently at 647.70, but soon after running out of steam on the upside from the effort of doing so. However, in this process, the month of May became a monthly key reversal up, a longer term bullish pattern that will, I suspect, come to influence the actions in this market, if not now, then in the future. However, June was not going to see any immediate resultant move higher, and instead prices dropped, making lows not seen since the horn bottom of February. The fall was finally stifled by a 2-day pipe bottom made at the end of June, based on the May 2023 low at 611.10, and prices have since zigzagged higher. The initial zig was up to the combination of the gold highlighted long moving average and the June 2021 low at 655.90. The subsequent zag was down again just over the May 2023 low, and the subsequent zig higher was up towards the May highs, just over the lesser Fibonacci line at 679 even. The latest zag lower has seen prices rip down through all the moving averages, which are far too close together for my liking. They're far too close. And down to the 2021 low at 629.5, and the continuation of the neckline for the April to June head and shoulders continuation pattern, which is currently at 627.5. All this toing and froing has created a wideish bull channel, currently 630.80 to 697.30. Since late June, which I've highlighted in bright red on my daily chart, you can see it there. It's the one that's there. Now, I originally liked the look of this bright red bull channel, but there are 3 points which I think should be considered, which may possibly hinder or change the outlook. Not wholly right now, but may, how shall I say this, become a nuisance. The first and most obvious is the previously mentioned concentration of the moving averages, all within a small area, specifically between 643.5 and 649.5. That's too close together. They have not acted as supports, and at most the gold highlighted long moving average has acted as a resistance back at the start of July. Personally, I suspect these moving averages may be more of a nuisance than anything else right now, but we shall see. The second point is actually something that I didn't do last week, but which I've started to do this week. Originally, I had not drawn either a bullish Andrews nor a bullish shift pitch hook for the mid-February to late June action. I deferred doing this because the mess of coloured lines we already have close to the market would make such a drawn pattern more of a confusing mess than it already is. However, I reserved the right last week to reflect and possibly draw either of these bullish pitch hooks, Andrews or shift, at my discretion at some future time. Well, that time is right now, and I've drawn a dark blue highlighted mid-February to late June bullish Andrews pitchfork. I was prompted to do this because the market was testing and breaching the bright red lower bull channel line, and I wanted something more secure to look at. Right now, the dark blue lower time, which is currently 620.70, is providing that security, though I would be happy in an instant to reframe the picture with a shallower bullish shift pitchfork instead, if I felt it necessary. This leads me to the third point, and it relates to the second point somewhat. This daily chart has become too concentrated and messy. The only elegant thing in the recent past has been the bright red bull channel, and this lack of clear market guidance was troubling me somewhat. Last week I said, and I quote, "I'll watch cautiously to see if it becomes clearer," end of quote. Well, when it does, I will let you know, and it's still not that much clearer at the moment. Bursa Malaysia crude palm oil. It has been months, many months indeed, since we had the key break higher over the upper time, currently at 37.99 of the August to November 2022 bearish shift pitchfork. Yet I've still kept this pitchfork on my daily chart. Now, why have I done this? It was because during May the market hesitated and built a base on this very thoroughly broken upper time, helped at the time by the 50% Fibonacci line of the May 23 to April 2024 move at 38.75, as well as the gold highlighted long moving average, which is currently at 39.21, plus the significant bright red highlighted May 23 to date uptrend, currently at 39.49, which has today yet again become involved with the market. The move back up started as a counter to the monthly key reversal down we saw in April, creating a small reverse head and shoulders bottom over May with a green highlighted neckline extension, currently at 39.47. There's also been playing a role this week. 5 weeks ago, I said about this move back up, and I quote, "Prices just need to overcome the following. The green highlighted short medium moving average, currently 39.48. The mauve highlighted medium moving average, currently at 40.40. The dark blue neckline, currently at 41.68. Of the September to November 2023 reverse head and shoulders bottom, the July 2023 high at 41.89. And a twin 38.2% Fibonacci lines of the July 2019 to March 22 move at 42.39. The May 2020 to March 22 move at 42.74 with the neckline of the September 2015 to November 2017 head and shoulders top, which is currently at 43.05, is nearby. So quite a mouthful in the way topside, you can tell from that. That's the end of the quote, by the way. In early July, prices did rise, but soon fell away, leaving, if you include the changeover, what looked like an island top in the first week of July. However, the decline was stymied as prices did not fall as far as the low seen in the last week of June, with prices held up by the plethora of supports that I have already previously listed. So instead, we have seen the start of what might be a slower rise higher again. In this rise, I've drawn a new support. It may only be a 2-pointer, but the mid-May to date uptrend currently at 38.98. Highlighted in dark blue has merit. Why do I say this? Well, it is because I can see a new pattern emerging, melding together two separate existing trend lines. Thus, if we take this new dark blue uptrend and the previously mentioned dark blue neckline extension of the September to November 2023 reverse head and shoulders bottom, well then together we have a wide but reasonable bull channel, currently 38.98 to 41.66. I suspect this is the pattern that the recent action has all been leading us to. So for now, we'll have to wait and see if this becomes true. Now, one final point, it's a point I've been stressing now for 19 weeks. I gave my thoughts on what was going on thus, and I say, so what now? Well, for this, I went to my standby on such occasions, the longer-term monthly charts, and there was one clear standout level that needed to be watched, and that was the November 2022 high at 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to the 44.08 area, and then what prices do at that level. End of quote. I can think of no better way than to still monitor what the market does should we ever manage to get up there to that 44.08 level. We have been up over it before in early April, but there have been no longer term closes up there, and by that I mean monthly closes. None over it, not yet, not even in July. It is a longer term target, so please keep a lookout now as we have just finished July, maybe for August or September or in subsequent months, should we get close to that 44.08 level.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.